Are you looking for a way to scale your short-term rental business and buy more properties? Well, co-hosting might be the right fit for you. Welcome to the Co-Host Coach podcast with Joe Roney. This episode of the Co-Host Coach is brought to you by Savvy STR Agents. If you're looking to buy a short-term rental, then contact the STR Savvy Agent team at savvy.realty.
Hey guys, welcome to another episode of the Co-Host Coach. I am Joe Roney, and today we're going to kind of shift gears from the co-hosting and talk a little bit real estate and where we are in the market right now, because we are only 2 months away from, the end of the year. So whether you're looking to buy a property, or take advantage of bonus depreciation, we're getting to the end of October, right? We all know that this next week is going to be the new pricing structure for Airbnb. Hopefully you've already made adjustments and started planning and have that in place. That's really, really important. If you have not done so, go 2 episodes back, listen and learn about the pricing structure change, and make sure that you put a plan together today to implement it, because that starts next week. But what I really want to talk about is the real estate market. And, obviously about a month ago, we had a Fed rate cut. Maybe by this time this comes out, we'll be talking about another one. My gut feeling is we're only going to get one this year. We might get another one, but the interest rates have come down, and the interest rates have come down a lot. We're in the, when I, film this episode, which is the end of September, before I go to Canada, go bear hunting. I filmed this episode and we were in the low sixes. Some, for conventional loans, for residentials, we're in the upper fives. Like, that's where we wanted to be. We haven't been this low in quite a few years, and it's a really great time to buy. It is a buyer's market, right? We are getting concessions. We are getting deals well under asking price. We're getting concessions and seller credits and all these different great things for our clients, because it's a great time to buy, and it's a great time to buy a short-term rental for multiple reasons, right? So I'm going to kind of go through what that looks like, what kind of deals you can get right now. Kenny Bedwell says it best. There are 13,000 vacation rental markets in the United States, and every single one of them is investable. Doesn't mean every house that's on the market is investable. There's a lot of bad deals out there. You have to run the numbers. You have to run the right data and truly understand what you're doing. And all of us in the co-hosting space, at the end of the day, the majority of us either own and we are real estate investors ourselves, or you got into co-hosting so you can fund your real estate investment. So if you're watching this podcast and you're not interested in purchasing your own short-term rental and you just want to get into co-hosting, great, no problem. And I love co-hosting, but co-hosting is a job, and it's a business that, it is a great business. But if you truly want to build generational wealth, investing in real estate is one of the best ways you can do it. So why am I buying a new short-term rental before the end of the year, or trying to? That's our goal, is to buy another short-term rental before the end of this year. And we're buying it for multiple reasons. Number one, bonus depreciation passed earlier this year. So I saved almost $30,000 on my tax bill from my 2024 taxes because of the property that I purchased last year. And last year I only had 60% bonus depreciation. I was really hoping they'd backdate that. So it cost me about $10,000 to $15,000 because they didn't. But at the end of the day, we still had a really nice tax savings on our taxes at the end of the year because of that bonus depreciation that we had. Now it's back to 100%. So you're talking on a $785,000 purchase price, you potentially could lower your tax bill $30,000 to $50,000, maybe even more, depending on the property, for your 2025 tax bill. That is huge. What that did for us is it took our 22 to 23% cash on cash return, which is what we potentially got, or pretty much got on our property, and it gave us a 40% cash on cash return. Where in the world can you get a 40% cash on cash return? There is not many places, and you can do it right here in the short-term rental space. You can do it by buying a short-term rental in your backyard, or at the beach, or at the mountains, or wherever it is you really want to buy. And there's lots and lots of opportunities right now. So please, if you're interested in real estate investing, or you're wanting to level up, now is a great time. So bonus depreciation, number one. Number two, interest rates have come down, right? I mean, I closed my DSCR a year ago at 7.625, and we're looking at refining this potentially and dropping 1 to 1.5%, like 6.5 or below. It's going to save me almost $600 to $700 on my payment. I mean, that's a significant increase in cash flow for my property because we're already going to profit $35,000 to $40,000. We go to refinance this at a lower rate and we save $600 or $700 a month. I'm not the math genius, but that's $5,000-$6,000 more in cash. Right now, I just took that 23 to a 25 or 27% return. That's huge. Yes, there is a cost to a refi, and you need to factor that in. Not every refinance and not every lender is created equal. There are going to be some that are going to charge you some really high fees. And if you're not going to keep your property for 3, 5, or more years, it's probably not worth you doing a refinance. We are planning on keeping our property for years to come. It's a new property. It's a cash flowing property, and it's making us the money that we want. It makes sense for me to refinance because I do plan on keeping it for 5 or more years. If you're not, just make sure you do the math. You might save $500 a month, which is, $6,000 a year, 48,000, whatever. Yeah, $6,000 a year, which is great. But if it costs you $20,000 to do the refi, well, then you got to be there at least 3.5 years for it to pay for itself. So just make sure you do the math. But interest rates are down. So purchasing a new property today is a great, great place to be because we have lower interest rates and we're also getting deals. There is so much inventory in some of these vacation rental markets. And the reason why there's so much inventory is there was a lot of real estate investors that went into these spaces and they bought these short-term rentals in late 21 and 22 and early 2023 thinking, oh, this is a get-rich-quick thing and I'm going to be so successful and we're going to have all this cash flow because I bought this short-term rental, and then they didn't go in and update their property or they didn't go in and do anything. They just said, oh, I just want to buy turnkey, and Joe Blow Realtor told me that this property is going to do $100,000 a year and I'm going to make a killing. And then the next year they did $48,000 and they lost $20,000 and they're not making any money. Those are the properties that are on the market today. 99% of the properties that are on the market today are on the market because they were unsuccessful with the current owner managing it. There are a few that have people that are leveling up. There are a few that are doing a, cost, equity analysis to figure out they need to level up their game and they need to, they have a lot of equity and they can reinvest that money into something better. But the majority of the houses that are on the market are on there because they're underperforming, and they're underperforming because of a couple of things. They're underperforming because, number one, their design sucks. Number two, they have no outdoor space, as we talked about last week, and they didn't invest in their property. And a lot of them hired this property manager that probably didn't do a very good job, and now they are losing thousands, and I'm talking tens of thousands of dollars a year operating a property in the red. Okay, they're getting tax benefits, and some of these people have more money than I could even imagine, and, whatever. They don't care that they're losing money because, they need that tax write-off. Whatever. They wouldn't have it on the market if they wanted to keep it. And it's on the market because it's not a good deal or it needs work. And a lot of the investors that call me and they say, Joe, I want you to find me a property and I want it to be turnkey. I'm the first person to say to them, that don't exist, right? I mean, at the end of the day, it doesn't. You are going to have to do something to a property to update it to make it stand out. And it could be a whole new design, and you may have to reinvent the wheel and spend $100,000 or $200,000 on that property. Or you might just have to go spend 5 or 10 and tweak it and just make it a little bit better than what it is. Every single property is different, but there is no such thing as a turnkey cash flowing property. Because guess what? The ones that are turnkey and cash flowing, they're asking so much money for those properties that they don't cash flow, right? They're not going to cash flow for you. They may be for that person that bought it for $500,000 less 5 years ago. But when they're selling it to you for 1.4 and it's only doing $140,000 a year, guess what? That's not a good deal. For you real estate agents out there that think, a 10% gross ROI, like if I can do 10% of the rent in or 10% of the purchase price in rental income, it's a great deal. It ain't. It ain't a good deal. Nowhere, no how. There's not a single place in America that a 10% ROI on a short-term rental is a good deal. So, unless you're doing it just for cash flow or just for tax purposes only and you don't care about making money, but if you truly want ROI, you got to find the ones that are get that 15, 20, 25% ROI or more, So we want that $1.5 million property to do 300,000. Is it always possible? No. But 275, 260, that's still pretty good, and that's going to give us some good cash flow. So, it's a great time to buy. However, if you want those tax benefits for 2025, your time is running out. And what I mean is you have about 3 weeks from the day of this podcast to be released to get under contract, get your property, get it live on Airbnb, and get some bookings so you can take advantage of the cost segregation in 2025. Obviously, if you're looking to do a remodel, you're going to have to do it after the first of the year. You're going to have to get this property in service, get some rental income, and then do your rehab in January. And we've done that on a couple. We've helped some clients do that recently on a couple, and we're going to be doing that, potentially on the one that we're looking at buying right now. So, we're not going to have time to go in and do a complete rehab before, January 1st if we don't close until, until December. And this is airing towards the end of October. So, if I'm not under contract by the time this episode comes out, we only have a couple weeks to get under contract because we have got to get it online and get some bookings so we can take advantage of that cost seg. So, great time to buy. You're running out of time though. So if you were looking and you've spent all summer long and you have that analysis paralysis, you got about 21 days. Might be able to push 28, but realistically, you got about 21 days to get under contract, get it closed, and get it live on Airbnb. So that's my take on the real estate market. It's a really, really great time to buy. It's a great time to be in real estate investing. And I really, really, want you to be successful. So, make sure you do a data-driven decision. If you're looking at buying a short-term rental today, make sure it's not an emotional one. If you have to tell me a story, I love this with Bill and his mastermind. They always say, if you have to tell me a story about why this property is good, then the property sucks, right? Because it should be very easy to put the numbers. This is the comps. This is what it's going to do. This is what we can do with it. And this is the return that we're going to potentially get. Are there any promises? No. We could go into another recession. We could have COVID number 2. We could have the Spanish flu. Anything could happen. Anything can change. We cannot change. We can't control what we can't control. But what we can control is what we do on the potential, what we do on the type of property that we're buying, and we can make sure that it's a really, really awesome property. So if you are in the real estate market, obviously us in the Savvy team, we are in like 30 plus different markets throughout the entire nation. Any of us can be happy to help you. We all own and manage in our markets, whether we own boutique hotels like, Jeremy up in the Northeast, or, own just single family short-term rentals like I do. It doesn't matter. We all own and manage our own short-term rentals. We have that inside knowledge for you so we can make sure that you're making a data-driven decision. Please, if you're looking to buy a short-term rental, give me a call, shoot me a message on Facebook, shoot me a DM, doesn't matter. Let's hop on a call and make sure we get you in the right one. So that's the real estate market today. If you have a real estate agent that you're working with and you love, keep using them. Don't just switch to switch. If you have someone you trust and go for it, man. They they've been working with you and you should continue to work with them. So thanks for listening to my soapbox on the real estate market, where we're at and where we're heading. I do think 2026 is going to be even bigger than 2025 because the 100% bonus depreciation does not stop and interest rates are going to continue to get just a little bit better. Are we going to see 3% or 4%? No, we are not. Could we see upper 5s in investment property? Maybe. Right now, I'm really happy where they're at. And real estate is starting to move again. And let's make sure that you're taking advantage of that. So that's all I got for today. Thanks for joining the Co-Host Coach. I will see you next week.